And we are live. Good evening. Well, it's evening right now, right? We're live. If you're catching us on the replay, greetings. Welcome to another episode of JMMB Goal Getter Live. I'm Carrie Ann Stimson. I'm the Chief Marketing Officer of JMMB Group, and I am here coming to you from my little room here. Just as usual, bringing you another fabulous episode of JMMB Goal Getter Live. Thank you so much for joining us. Whether you're catching us now on the live or catching us on the replay, you know how we like to do it. Drop a comment, tell us your name, tell us where you're watching us from, and we're happy to see you. Welcome. I'd love to see our regular peeps, and we also like to see some new peeps every single week. We have some new people joining us, and we're happy to have everybody because the one purpose why we're here is to give you the information that you need to navigate your finances so that you achieve your financial goals. That's the only reason why we're here, guys. And we're happy to bring this to you. Yes, we started this in March of last year at the beginning of the arrival of the COVID-19 pandemic on our shores. We got some really warm reception. And in as much as COVID is still here and we're not quite sure when COVID is going to disappear, we're still here because guess what? Money is a conversation that we need to be having every day, all the time, in every single way, because we still have our goals to achieve in COVID, out of COVID. We still have our goals. We're going after them. And yes, JMMB is the organization that's going to be here for you. Now, speaking of here for you, let's just keep it real, guys. We are now at the beginning of summertime. Yes, well, technically we probably have another week or two to go before the kids get summer holidays. Can someone take my two? But yes, we are at the beginning of summer. If you didn't get the memo, it's hot. So yeah, it's hot here in Jamaica. So summertime is here. And so we're wrapping up. This is the final episode of season 3 of Goal Getter Live. So tonight is the last episode. We're going to be taking a break for the summer months of July and August. We're in June. We're gonna take a break in July and August. So you won't be seeing us live July or August. Of course, lots of replays to catch up on when you need to, and then we'll be back with you come September. So we're gonna have one fantastic episode tonight. If you didn't catch the flyers on social media, this is a super mega episode with awesome subject matter experts, and this is your episode more than ever. But let me just pause and say hello to my people in the comments from YouTube, Facebook, Twitter. Hey, Shanique, CM, yes, Medea, with Dea too. All right, good to see you. We're good, Shanique. How are you doing? Hey, Katie, what's happening? Richardo, my main man. Well, shh, you're not really my main man, but you know it is, right? Don't tell my husband. Shh. Marvin, what's happening? Tanika, Bro M, good night, peeps. How you doing? Yes, we're back again for another Tuesday night. Yeah, curfew keeps getting pushed back later and later. I know we're celebrating, but guess what? We're still here. It's a Tuesday night, so we're still here giving you the goods, right? Hillary, what's happening, Hillary? Welcome. Tari, Marilyn, Rushane, Leroy, Dre, what's up, Dre? Oh, Shane, love it. Thank you so much, guys. Bro M, how you doing? Branjamin, you know, I hope that I'm pronouncing these names properly, and some of y'all have these interesting handles. So I'm just going to continue to have fun. Welcome, Janice. Yes, guys, drop your name in the comments. Let us know where you're watching us from. This is the last episode of this season 3, Goal Getter Live. We're going to be taking a break in July and August. We're going to be back for you in September. And guess what? This is going to be a mega episode right here because we brought some awesome guests. Some of them you've seen from earlier this season. Others you would have seen from prior seasons. But trust me, it's going to be fabulous because it's going to be your discussion, guys. Your questions right away, all the way, right? Because we're going to go back to some things we would have discussed on this season and even prior seasons as well. And it's your opportunity to drop your questions, right? Hey, Terrence, what's happening? Welcome, Carlton. Terrence, first time watching. Love that. So, Terrence, you have a whole heap of prior episodes so you can break out the popcorn and do a proper movie night almost every night for the next 2 months. You're gonna get some awesome information. Hey Wesley, how you doing? Where's Lucas Zaid? Sharia, love it. Love it, love it. No man, yes, you're going to miss me, but guess what? We're going to be back. God's willing, we're going to be back in September and we're going to keep dropping the goods. Guys, remember to share with us your suggestions for any topics you want to see us come back with in season 4, right? Because we're coming back and we, as usual, we love to bring it hard. We love to bring it big. So drop your topic recommendations, anything you want us to cover in season 4. It can be new topics. It could be old topics. It's not a problem. Hey, Nigel. How you doing? Yes, Wesley, doing great. Love it, love it. Hey, Jackie from Kingston and Carlton. Carlton, love it. So yes, guys, tonight we have 4 awesome experts, some financial experts who are here to answer your questions. And guess what? You can drop your questions whether you want to ask about stocks, bonds, unit trusts, you want to talk about retirement and retirement scheme and retirement planning, you want to talk about banking, whether you want to talk about savings, whether you want to talk about loans and credit facilities. Yo, just drop the questions, guys. Just drop it. We're not shame inside here, right? We're keeping it open, we're keeping it real. And as I like to say, we like to break it all the way down. We like to keep it all the way real. So this is your episode where you get the chance to ask your questions. We're covering anything from stocks, investments, mutual funds, bonds, everything in the investments realm, retirement planning, and on the banking, savings side, credit facilities, deposits, what have you guys, budgeting. We're there for it. So guys, please drop your questions. Hey, JJ, Janice, love it. Ashley, my sister-in, log summer can't pass me. I'm going to link up, but guess what now? My summer is going to be a hot mess, but I'll probably have to save that for a social media post. If you follow me, you'll find out why it's going to be a hot mess. Hey, Sophia, what's happening? Thank you. Good night. Good night. Good night. Happy to see you guys. So yes, guys, start dropping your questions. Let me introduce our 4 awesome guests in the meantime while y'all get warmed up, because I know you got the questions coming. Hola, Orenthia. I love the name Orenthia. She knows that. So let me start out with the lady first, right? Lady before gentleman. She is Camille Stair. Camille is what I like to call one of our divas at JMMB. I mean, when you see Camille, at the office, and I don't get to see Camille often anymore because of this blooming COVID. But Camille always put together, even see a cowlick out of place. I mean, Camille is just got it. And just say, look at her, she look fabulous, and look at the hour of night. And look at my head and look at hers. I'm telling you, Camille just got it. Welcome, Camille. You're on mute. So could you unmute your microphone and tell us what you do? Remind us, rather, because you've been on Goal Getter Live a couple times before. So remind us what you do at JMMB.
So I work with JMMB Fund Managers, Senior Corporate Manager Fund Services. So I'm in charge of sales and service as it relates to pensions, unit trusts, and also the property management for JMMB Fund Managers.
Yeah, she knows her stuff, people. She knows her stuff. I'm just saying, Camille is well sorted out. I'm not even going to talk about her marital status right now. I don't want nobody sliding into the DMs. No sliding into the DMs, people. It's not that kind of episode. But Camille knows her stuff. So if you have any questions about retirement planning, retirement schemes, especially, that is her area of expertise. So get your questions ready and drop them. Welcome back, Camille. Thank you so much for joining us. All right.
Thank you, Karen.
Great. Now, let me bring up one of our gentlemen. Let me bring up Jerome Jarrett. We didn't see Jerome this season, but we saw him a couple times in prior seasons. As a matter of fact, he hosted probably what was the hottest episode of Goal Getter Live to date. He spoke about, were you the one? You weren't what men want. You were talking about men's health and wellness. You're on mute, so you beg you unmute yourself.
Yes, it was health and wellness.
Health and wellness, although, when you talk about wellness with men, a little below the belt conversation has to come in there. So Jerome was that host.
That was definitely,
and yes, I begged the doctor to write a prescription for him. So Jerome is an expert in many things, but his particular expertise that we're going to be drawing on here tonight is in the area of savings and loans in particular. So Jerome, could you remind us what you do at JMMB?
Okay, I am the team lead for the financial financial advisory unit, a department of external sales team. We sell all financial products for JMMB Bank, and we just provide solutions to our clients. Anywhere you are in Jamaica, we'll come and get you. So you need to just give us your address and we'll come and get you.
Yeah, man. Jerome has an awesome team. They are not attached to any particular branch. They roam around and meet persons and have those financial planning conversations to get them going. And it's awesome. Welcome, Jerome. Hello, Wesley. It's not that kind of life. You see Wesley in the comments saying he's successful hot woman like Camille I need. It's not that kind of life, Wesley. No. We're talking financial management.
I agree, Wesley. I agree.
You see, Jerome, you're going to get me in trouble now. All right. Thank you, Ashley, for asking a question. See, Ashley's out the gate with a question. And thank you, Jazzy Dreamer. See, we have some well-behaved people in the comments. Okay. Somebody needs to be muted, but I don't know who's coming up next. I'm going to bring on Uncle Greg next because Greg Lindo is coming up next. I know Greg is a very busy man. Right? Greg is a husband, and if you didn't guess it by the paint color on the wall in the background, he's also a father and a father of a little girl. So we're making it clear Greg's tastes, are not unusual. He's acquiescing. Yes, he's not right. He's not exploring anything new. He's really just, choosing another location relative to where he would have broadcasted with us the last time. When you're working from home under these conditions, guys, you just find a nice quiet corner. So this is a quiet corner.
Exactly, right? Exactly.
It is what it is. It is what it is. Now, welcome, Greg. Trust me. Could you remind us? Trust me, it is. Yeah, we're like an AC. I said, like an AC unit in the corner. Trust me, wherever it's comfortable, we're going to do this. So, Greg, remind us what you do at JMMB, please.
I'm the assistant general manager for trading and treasury. So, my specific role involves oversight of brokerage and proprietary portfolios.
Okay. I don't know what's going on. There's an echo, but let's see. But yeah, so Greg is assistant GM, treasury and trading. So anything in that space, he is one of our stock gurus. Yeah, he's gonna put on his headset. That may help. He's one of our stock gurus and investments, anything at all. So welcome back, Greg. Greg had one of our more popular episodes because stocks is always a hot topic. Welcome back. And then last but by no means least, one of the marketing team's favorite gentlemen who we love to see his face coming. What you normally, when you walk in the department, what you normally say, Peter, it is I. For those of us who used to watch Allo on TV back in the day, all the younger Gen Zs and older millennials, and used to watch Allo, it is I, Leclerc. If you don't know that comedy, guys, it's an awesome comedy from back in the day. So Peter would always walk in, it is I. And we're like, yes, Uncle Peter, because we know Uncle Peter come to drop the nuggets all the while. So Peter, welcome back again to Goal Getter Live. You are muted, so I'm going to invite you to unmute and remind us what you do at JMMB.
All right, top of the evening, everybody. So I'm responsible basically for all what we call off-balance sheet funds, all client funds at JMMB. So pension funds, unit trust, managing clients' portfolio. I have oversight for all of that. So I have a team of investment professionals who support that process. So the performance of unit trust and pension funds, that falls on my desk.
Yeah, man. So Peter have a serious set of hats to wear. And of course, we benefit and our clients benefit from Peter and his team's expertise as well. So guys, we have an awesome cadre of folks here. If you're just joining us, welcome to this mega final episode of season 3 of Goal Getter Live. We're taking a break for the months of July and August. We're taking a break over the summer. We're coming back in September, so don't worry. We're coming back in September, so you can use the opportunity over the summer to rewatch all of the prior episodes you would have missed. Just go to our YouTube channel, JMMB Group to make Jamaica, right? But in the meantime, tonight is your show, right? We're opening it up with a series of opportunities to guys ask your questions of our experts. So whether you want to talk about investments, stocks, bonds, unit trust, retirement, savings, loans, credit facilities, this is your opportunity. This is your night, right? And we're an episode. We're handing it over to you again. Thank you to everybody who's coming at us in the comments. We love when you say hi and tell us where you're watching from. Hey, Janice, Lisa Cook, welcome. Hey, Jennifer, welcome. Jams 1040 watching from Canada. See, we're international, guys. Hey, Clara or Clara, forgive me for the pronunciation if I'm messing it up. From Crossroads. Love it, love it. Hey, Chris. Hey, Rochelle. Everybody. Yeah, man. Jackie. Sharia. Oh, my goodness. These names are just really rolling in. Thank you so much, guys, for joining us. Hey, Steph. Hey, Mel. Yes, Mel. Hot girl Camille. Everybody is getting the memo tonight. I tell you. Hey, Mandy. Nice to see you with your little emoji face. Love it. Bro M. What up? What up? You're dropping the questions already. Yes, Wesley. We loved Allo Allo too. It was a great comedy. Great comedy. All right. Okay, so let's jump off with the questions, right? I'm seeing one here from, and it's great because it's a retirement related question, but don't worry, guys, I'm going to try to get to as many of the questions as possible. So let's go. This is not an exam, but our people are in the hot seat. So, Camille, here's a question here from Nigel. Hey, Nigel from YouTube. Welcome, welcome. What type of pension schemes are, well, his nomenclature is pension schemes does JMMB offer? He just really wants kind of an overview of what those are. Thank you, Camille. Over to you.
All right, so thank you for that question, Nigel. So we offer an approved retirement scheme, which we call JMMB Retirement Solutions, and we also manage approved superannuation funds. So we do the whole suite of pension fund management services.
All right.
The product is JMMB Retirement Solutions, which is our approved retirement scheme.
And what is an approved retirement scheme? Quickly for us who speak English.
With an approved retirement scheme, anyone who is not in a pensionable post or not contributing actively to another pension arrangement, they can just walk through the doors of JMMB and say, you know what, I want to be a part of this retirement scheme. For the approved superannuation funds that we manage, those are usually by entities that have set up their different arrangements, and we manage it on behalf of these companies.
Right, wonderful. And we had an awesome episode on retirement. So you can go back. I know we did one maybe about several weeks ago on our YouTube channel, JMMB Group Jamaica. You can watch those episodes. It was wonderful. And again, that scheme for people who are not part of a pension plan. Some of us don't work with companies that have a pension plan in place. Some of us are self-employed and don't have one. An approved retirement scheme is an awesome way for you to benefit from being able to save to or invest towards your retirement. So it's something you really can check out. And those episodes were great. Thank you so much for your question, Nigel. Ashley came out of the gate with a question as well. Hey, Ashley. Now, Ashley was asking, and this I think is a question for Jerome because it looks like it's related to managing loans, debt, credit, that sort of thing. Ashley's question is, what's the best way to consolidate credit card debt first and then manage your expenses after? I think this is a great question because a lot of us, we got a lot of credit card debt, probably went a little too trigger happy with the shopping. And then we have a lot of credit card debt. So I know you talk about how can we consolidate that and then going forward managing our expenses to make sure we don't kind of get into that sticky position again. Jerome, what say you? You're muted, I think, Jerome. Are you?
Yeah, hello?
Thank you. Yeah, man. We are hearing you loud and clear. Yeah. Thank you.
Yeah, afternoon again. Thanks for the question, Ashley. It's a lot easier said than done. Managing your credit card is if it was that easy, then all of us would not be in as much credit card debt as we're in. So it's very important that you identify those credit cards that pretty much are useless. The ones that, people like the cards that carry advantages, so miles, cashback, different advantages. So use those cards. It is preferred that you use one card, right? I know many persons have a card from each bank. Some people have two cards from each bank, but it's preferred if you use one credit card from one institution that gets you the gamut of benefits. So if cashback is your thing, then put all your spending on one card so you get all the cash back. If miles is your thing, then put all the spending on the one card so that you get the miles. But it's very, very important that after you consolidate the debt, you manage the credit card in a way that you clear it monthly. The only way to avoid interest on your credit cards is if you clear the balance in full every single month before the due date. And by in full, I mean if you spend $100,000 on the credit card for the month and you pay back $99,999, you're gonna pay interest on $100,000. A lot of persons don't realize that unless you clear the balance in full, you're gonna pay interest on the entire amount. So it's very, very important that you clear the balance every single month after you consolidate those credit cards. And a good thing to do, as long as you're able to cut up those credit cards after you consolidate them, cut them the hell up.
Oops. Okay. Yeah. I'm glad you raised that point. And I think this is a great question, Jerome, because we would have discussed some episodes back about this phenomenon called this product rather called a debt consolidation loan. And that's a good loan facility to assist you with consolidating credit card debt. How does a debt consolidation work to be able to do that for someone who wants to explore that?
All right. So, for most persons, we have facilities at several different financial institutions, and even at the same financial institution, we have several debts. So for instance, a person has a credit card, they have an unsecured loan, maybe you have a student loan, maybe you have a car loan, maybe you took a loan sometime ago to go on vacation, so you have that loan carrying as well. So if you are making multiple payments each month on several different facilities, well, JMMB offer the facility where you can put all those debts together in one and make one affordable monthly payment. So let me put some figures to it. Say, for instance, you have a credit card with $100,000 and each month you pay maybe $40,000-$50,000 on the card each month. You have an unsecured loan for maybe $1 million that you pay $30,000-$40,000 monthly, and then you have another loan as well that you pay another $20,000 and another loan that you pay another $20,000. Putting all those debts together in one affordable monthly payment, stretching the payment over a longer time frame, using a much lower interest rate than for instance, your credit card at 55%, we can give you an unsecured loan from as low as 14.5% and give you as much as 7 years to repay. You can cut your debt sometime, in quarter, bringing down your monthly payments and give yourself some much needed break in your monthly obligations. So is a very important tool. It's a very good tool that can be used to reduce your monthly expenses.
It is, and I know it's been a lifeline for a number of people because, as we know, interest rates on credit cards can be a challenge. And if you're one of those people who unfortunately got yourself in a situation where you're carrying these huge balances, being able to consolidate what are interest, credit card debt, which carry interest of upwards of 40%, being able to consolidate into one loan that you only have maybe a 14%, as you said, Jerome, interest rate. That's awesome. And then just recognizing, looking at getting a handle on your budget, where you're spending, what are those expense stealers, as I like to say, things that you need to be aware of that you're spending money on, so you can, as you said, get control of your expenditure going forward. If you need to get rid of your credit cards, if even for a while, just to help you to get back on track, that's an option. It is what it is. But certainly debt consolidation is a great alternative. Thank you so much, Ashley, for your question. Now, guys, yes, keep dropping the questions. We're seeing them in the comments and we're moving as quickly as we can. Bro M has a question here, and I'd love to direct it to Greg. Because he's asking, I'm assuming it's a he. I'm sorry, because, I don't know these names. So forgive me, guys, if I'm getting your genders mixed up. My apologies. But asking about preference shares. So, for instance, JMMB, of course, has at least one preference share listed on the stock exchange. And he really wants clarity around preference shares because, he notices that the prices move up and down like you would see it move on an ordinary share, Greg. But he's like, but don't they have like a fixed interest rate anyway? Don't they have a fixed return? So what's the purpose of that price movement? Could you kind of break it all down for us, please, Greg?
Sure. So you have two main types of shares. You have ordinary shares, which is the what you call common stock that gives you voting rights at the annual general meeting, as well as rights to ordinary dividend once they're declared. And you also have preference shares, which are a little bit higher up in the capital structure. They rank ahead of ordinary shares, so in case there is any sort of liquidation of the company, a preferred shareholder gets preference, hence the word preferred over common shareholder. It does not usually come with voting rights, but it does come with in many cases, a fixed dividend. Now, in the case of the JMMB 7.5%, it would have been fixed for the first year and then year after. However, rate on the preference share, whether fixed or variable, is paid on the principal or par value. So the preference shares were offered at say $1, is the redemption price, that's your par value. What happens is once these shares are listed on the stock exchange, the price tends to fluctuate based on supply and demand. In the case of a preference share, let's say you have 7.5% fixed. If interest rates in the market fall, then that rate actually looks very attractive. Persons are now willing to pay a premium. So what you find is that even though it's fixed at 7.5%, if you have it at par, people will now pay a premium because they are willing to take a 7% return or a 6% return, depending on what's prevailing in the market at that time. So although preference shares are different, they are subject to market fluctuations, which are really supply and demand based on what's happening at that point in time. And it can also trade at a discount. So it can be at below par value and actually get a rate of return that's even higher than the stated dividend.
Okay. Greg, just to acknowledge that you're breaking up. I don't know what's going on. I don't know if it's a microphone challenges or what. But you're breaking up quite a bit. But let me just kind of see how I mean, I don't know. Peter, could you kind of just summarize what was shared a while ago in terms of, I know Greg was talking about, the difference between preference shares, ordinary shares, and how they work exactly. Could you just kind of recap that real quick? Thank you.
All right, no problem. All right, just quickly. So what you was talking about is the difference between an ordinary share and a preference share is one has preference over the other in terms of how you get back your money. I think the question was generally talking about why do we see the price of the preference share change? So the price of the preference share changes because somebody out there is willing to buy the preference share more than what you paid for it. So on a day-to-day basis, you will see somebody out there looking to buy or somebody looking to sell. When the demand exceeds the supply, the price will go up. And vice versa, it goes down. So the end result is that the preference share does pay a fixed rate of return, meaning I'm going to give you 7.5% based on the principal that you invested. And that is the amount of money you're going to get for the life of the investment. However, that doesn't stop someone from saying, I will pay a little bit more for that stock. The net return to them would be lower because they're going to be getting 7.5%, but they spent more than what you spent to buy it. So when you take the interest as a percentage of what they paid for it, the return would be less than 7.5%. And vice versa, if the stock price falls significantly, they're looking at a return that's higher than 7.5%. So you will see that volatility, the price of the preference share move up and down just based on demand and supply. I hope I got that.
Right. Yeah, I think so. Yeah. So it's really the price is really an indication of demand and supply, but the return, the interest payment you're gonna get is based on what interest rate prevails at the time, depending on the I guess the type of preference share you would have signed up for or bought.
And to be perfectly correct, it's actually not interest but dividend, but it's a dividend per se, but everybody, it's calculated like interest, so we use it as interest.
Right. In this case, it started out at 7.5. Thank you so much, gentlemen. Much appreciate that. All right, next question again. I'm just trying to take them in order. Thanks for your questions, guys. I see all sort of great questions coming in. Ashley again. And I think this is a great question for Camille. Camille, I think this question is close to Camille's heart even. That Ashley says she personally prefers early retirement. Yeah, I prefer that too. I think I'm past early. But hey, one can always continue to dream. What kind of roadmap should she build, Camille, if for someone who wants to retire early?
Actually, that's a lovely question, and it is a question near and dear to my heart. So, with the early retirement, what you're focusing on is the first thing is that you need to start now. If you're not a part of an approved pension arrangement, you need to say, okay, fine. My organization may not offer one. Should I go to JMMB that has an approved retirement scheme and start making the contributions? Because you have to start now. The recommendation is that as soon as you start working, you need to be contributing to a pension arrangement, because in essence, what you're doing is that you're trying to, especially for early retirement, you are trying to maximize the amount of contribution that you are making towards this pension arrangement, so that your replacement rate, and when I speak about the replacement rate now, the replacement rate is 75%. But if you're going on early retirement, say at age 50 or even earlier, say age 45, no, but the law says 50. But if you want to go earlier, what you would have to do is possibly have supplemental investments. But if you're going off at age 50, what you should be doing is ensuring that you maximize the contribution. The law states that you can maximize up to 20% of your earnings. And then you should also be monitoring now, looking on your pension statement every single year, and even more so if you can download it from possibly like at JMMB, you can download it on Moneyline and look on your pension statement, and you'll see the replacement rate. And if you're tracking probably 60 or 65%, you need to say, okay, fine, how is it that I can maximize the contribution? So on the road to early retirement is that, one, you need to start now. Two, you need to be looking on your replacement rate. If you need to speak to your financial advisor, look on your member statement and say, what is my current replacement rate? How is it that I can go up to 75% or even exceed 75%? What are some of the supplemental investments that I can get so that I can be secure in retirement? And that is how you would build a roadmap towards going on and achieving early retirement. And what we would have used to underpin that is what we call the ABC framework. When we're looking on auditing our expenses, especially if you want to go on early retirement, you're auditing your expenses, looking on all of your finances and seeing what breathing room you may be able to get from that, budgeting, and then being consistent with your contributions so that you can achieve that goal of early retirement.
Love that. Thank you, Camille. Thank you, Camille. And great question, Ashley. Much appreciated. All right. So moving along, we're getting the questions fast and furious, guys. Keep them coming. Want to say a special welcome to some folks who joined us since we first started. A big up and special welcome to David Rose. David, who is, the man, right? Everybody knows David. If you're on Twitter and finance Twitter, you don't know David. You need to follow him. Welcome, David. Hope all is well with you. Thanks for joining and thanks for dropping the nuggets. We're a family on this live. I find we have some people like David and Odeon who join in from time to time and drop their nuggets as well. So we're offering mutual learning in these discussions, and it's great to share with everybody. Thank you very much. All right. Okay, next question. Peter, I want to drop this question your way from Jazzy Dreamer. Jazzy Dreamer was asking, what's the difference between a money market fund and a money market account? Is there a difference, Peter? Could you clarify for us?
Well,
difference?
Well, technically speaking, they are the same in that the investment are predominantly short-term type investments. You have the ability to get access to your money quickly within a day. So it's a type of investment. Both are types of investments that allow you to get access to your money immediately. So it's not a bank account. It's really an investment, but all of those investments are in short-term type instruments that allow you liquidity whenever you need it. So the difference between fund and account, there's some legal terms around what a fund is versus an account, but in essence, to the ordinary person, they're investing in short-term instruments. So to the lay person, is no real difference between both.
Okay, good to know that. I didn't even know that. Okay, great stuff. Thanks, Jazzy Dreamer, for your question. All right, we're still dropping the questions. Thanks, guys. Keep them coming. The next question here, I'm going to direct it back to Jerome for the time being. Lovey, hey, Lovey Lima, asking, what do I need to submit, I'm assuming, to get an unsecured loan? How do I apply for an unsecured loan, Jerome?
Yeah. Thanks for the question, Lovey. The process is for an unsecured loan is pretty simple. We just need to verify your income. That is usually done using a job letter, your last 3 pay slips. If you are a commission-based person, then it would be your last 6 months pay slips. So we can have a good average of what your income is. We also need to verify your identification, so a valid ID, and a proof of address. So we don't ask for a lot. We just ask for your proof of income, proof of identification, and proof of address. Pretty much that's it.
All right, thank you. Good stuff. And what's the difference between an unsecured loan and a secured loan, Jerome? Because I know I didn't know the meaning before I started to work with a bank. So could you clarify for us?
All right, so pretty much an unsecured loan is a loan that is not backed by any form of security. So the bank pretty much use your credibility and your name to give you some money, because they don't have an asset that's backing the facility. So it also carries a elevated level of risk, as you may imagine. So it carries a greater interest rate, usually in the teens. They are about. It pretty much is more risky for the financial institution, so they have to charge a higher premium to recover the funds. But it's just pretty much there is no security attached to it.
Great. Thank you for that clarification. Guys, we're learning here tonight, right? We're not assuming that everybody know all of these things and what they mean. And, trust me, we're trying to make sure that everybody understands. Thank you, Jerome, and thank you, Lovey, for your question. Keep them coming, guys. All right. So here is a question from Nigel again. I'm going to go between Greg and Peter. I think it's a good opportunity to test Greg's mic, because I know, guys, we're dealing with technology, right? So stuff happens. He had a question about what's the minimum amount to open an investment account with JMMB. Now, JMMB has different types of investment solutions. So I don't know, Greg, can you speak to if I wanted to open like an EMA account or our version of a stock brokerage account, an equity money market account? What minimum do I need for that, Greg?
I believe the minimum is $10,000, but you can also open the account and transfer stocks if you have stocks at another institution, and they will use that as well. So you don't necessarily have to have just a cash amount to open the EMA.
Right. I know Ashley and I had a banter some episodes ago, because I know as a standard we say 10,000 Jamaican, although I know of people who open it with a little bit less than that, because at the end of the day, once you're ready to start trading and buying stocks, for instance, as long as you have the amount that you need to be able to do that in the EMA, you're good to go. So yeah, officially it's 10,000 Jamaican dollars to open the brokerage account. Peter, if I want to do unit trusts and the portfolios like the wealth builder, what's the minimum there that I need to start, please?
All right, thanks. All right, so for the wealth builder or for the unit trust portfolios, we go down as low as $100 for the US type structures. And for the non-Jamaican, it ranges as low as around $10,000. Now, again, we're about allowing clients to achieve their goals. So the minimum to start an account, we are saying you need to start, right? And where you are in your financial life cycle, it may mean that, okay, you can only start with X amount of money. So we are willing to work with you to achieve that objective. The aim is that at the end of the day, you can commit to some form of investment, and you're starting early. You're doing something towards your goal. But on paper, the conditions to opening a unit trust account is around $100 or 10,000 Jamaican. On the wealth builder or the products or the goal products. Now, these products are made up of unit trusts. So I saw somewhere in terms of like a wealth builder or our education solution. The idea behind that is you don't have enough time to be managing when to buy, which unit trust to buy, when to buy them. So what we designed is a program where you commit to say, all right, I want to achieve my child's education in 2 years, 5 years, 10 years. Then we will package a solution of unit trust, a combination of unit trust to help you achieve that objective. So each period you make your investment, it is allocated among a series of unit trusts that are specific to your needs and your requirements. And then, so we're doing that on a frequent basis. We're rebalancing. So my team does all of that work. Now, the minimum to start those, we start out at 100,000 Jamaican dollars.
It's 50 now, Peter. 50,000 Jamaican.
50,000.
Yes, I'm going to send it to you. Yes, because Ashley and I were bantering on that in a prior episode as well. It was 100,000 at a time, and then it moved to 50,000 Jamaican.
Again,
it's all good.
To make sure that everybody is involved, right? So again, it starts and we're allocating it. But what I'm more interested in is that frequency of investments. So you start with something, but then you have that discipline towards investing on a frequent basis, because that's where the real nugget is, right? Because unit trusts are going to go up and down over time. So each time you're making an investment, you're getting some of those low per units, as in when the prices fall, you're buying some at that low level. It goes up, you buy some at the high level, then it goes down. So I like that disciplined approach towards investing, because I think over time, that is what really works out.
Yes, love that. And just to clarify, guys, again, so to wrap up the answer to that question, there are different types of investment accounts at JMMB. So if you want to open a stock brokerage account, we call it the Equity Money Market Account, or JMMB EMMA, EMMA is the acronym. 10,000 Jamaican dollars. Some people opened it with less. Say Brand Jamin said that they opened their account with no money at all, which probably is possible, because again, once you have the money in place, when you're ready to start trading, it's a thing. Do that. When we're talking about the wealth builder or any other the portfolio accounts like the wealth builder or the JMMB graduate, it's 50,000 J, or for the J dollar ones, or 500 US for the US dollar ones. I believe that was it. But for the unit trust, those starting amounts are much lower, closer to like the $100 US range, or a few, not less than 10,000 Jamaican dollars, depending on the unit price of the unit trust fund that you're buying into. So different prices. But the point of the matter is, guys, and I say this to people all the while, every financial institution, of course, has the right to have a starting balance for the various accounts that suits them. JMMB, of course, was founded on the basis of giving the everyday Jamaican the opportunity to start investing and saving towards their financial goals. So we have an option for everybody. You don't need $250,000 and the rest $1 million to start an account. The goal is start, bring what you have. We will find a solution and you can get going, because everybody has their goals and dreams, and we're about here to make it happen. I love it. Love it, love it, love it. The questions them coming in, man. Love it, love it, love it. Acknowledging a question from Shanique. Shanique, I'm going to acknowledge your question that we will not be able to answer. It's our life insurance question that Shanique had asked. Shanique, we tried our best to get one of our insurance colleagues on the program tonight. Unfortunately, they were not able to make it. So we won't be answering any insurance questions tonight. But you know what? This is a great opportunity to remember that come season 4, we have to come back with another insurance program. We did general insurance about 2 weeks ago, so you guys can catch that episode on the replay. It's on our YouTube channel. But we're gonna cover one for life insurance in season 4, so stay tuned. Awesome. Now, Ashley had another question, and I'm going to just bounce this back to Jerome. Ashley's asking if you pay off your loan early, or is it always a thing that you get charged penalties when you pay off your loan early, Jerome?
Well, not here at JMMB, but other institutions. Some institutions, they do charge you early, especially on mortgages. There is a 3-month penalty if you pay off your mortgage early, but not here at JMMB. We don't believe in nuisance fees. We don't believe in unnecessary fees and charges here. So no, there's absolutely no penalty in paying off your loans early.
With JMMB. All right. Love that. Thank you, Ashley. Great question. All right. Gonna bounce this question back to Camille. Catherine, my mouse cursor was over the K and I thought it was an R. I'm so sorry. Catherine asking, how do we go about moving your pension if you're in a pension plan with one institution to another? How do we do that, Camille? Thank you.
Thank you for that question, Hathori. I hope I pronounced the name properly. So moving a pension. So the first thing is portability. So yes, it can be done. But there are some instances whereby, based on the rules of a particular pension arrangement, it may not be possible. So you'd have to check with your administrator or check with your HR if it is possible. But moving it from one institution to the other, at JMMB, it is very simple. What they do, they usually complete what we call a transfer option form. And one of our pension officers, fund sales and services officers, they will just follow up with the client and also the institution and facilitate the transfer.
Just as simple as that. Love that. Love that. Thank you, Camille. Thanks for your question, Catherine. Okay, Javon has a question. And I'm going to bounce this back to Greg. Javon wants to know, how should I go about buying shares or stocks on the stock market through JMMB? How do I go about doing that, Greg?
The first step is to open a EMA, an equity money market account. That will give you that will allow you to actually trade. You can trade using our online platform called Moneyline that gives you direct access to the market. So the first step, open the EMA account, speak with, of course, your advisor to guide you in terms of how you want to structure your portfolio, what you should be buying, probably what you should be staying away from based on your risk tolerance. And once the account is set up, you can start to trade.
Easy as that. And trading is online. Yeah, straightforward. We love it because we got so many questions. Yeah, it's online, guys. The JMMB Moneyline, one of the wickedest online platforms to the trading in Jamaica, right? Yes, I'm being paid to say that. I'm just saying, you know, I mean, but no, David can tell you. So yeah, David don't work with JMMB and he knows Moneyline for trading is awesome. And you can do your trading online once you open up your EMA. So very easy, very straightforward. Awesome question. Thanks for your question. All right. So let's jump back. Gonna go with Orville. Orville has a question here. Well, I don't know if we can answer this question. Orville, you're giving us some maths, and I think the answer to this question is it depends. Because Orville specifically was asking, and this is a Jerome type question, the monthly payback on a $2 million unsecured loan for 5 years and 6 years. Orville, that looked like a one-on-one conversation, man, but I'll ask Jerome to posit how we can respond to that.
All right, I cheated a little bit, Kerry. I saw the question, so I kind of worked it out before.
Oh, great.
So, but you know, David, Orville, it would be best you call us to have a conversation, you know, rather than me spilling the beans all over social media. But you're looking for 5 years, you're looking anywhere between the region of $47,500, and for 6 years you're looking at about $42,000 per month. For $2 million over 5 and over 6 years.
Repeat that figure again for me, please.
So at 5 years, you're looking at 47,500 per month, and for 6 years, it's 42,200 per month.
Okay. All right. Thank you. Guys, I'm not the maths person, so I would never even try to answer that. But thank you so much. Yes, guys, we're trying to pick up the question. This platform is kind of great because we have a private chat that we see on the back here. And so we kind of pull the questions across so we can get prepared beforehand. Love it. Thanks for your question, Orville. I know you have more coming. Awesome. The next question is from Angie. Hi, Angie. Okay. Angie's question is someone who's almost 60 years old, and I think this is a Jerome question as well. And I know a lot of folks are in this position. Someone who's almost 60, so late 50s, I'm presuming, is interested in buying a house. What kind of tenure for a mortgage are they looking at? Because age is a factor when we're looking about mortgage.
All right. So the answer to the question is depends. For somebody who is salaried, the normal retirement age is 65. So usually we don't want you to have a mortgage late into your retirement. So we would give you round about 5 years to repay that mortgage. There are instances where we may and can go above the 5 years, the age of 65. Say, for instance, the person is a professional, an attorney, an accountant, a doctor who is able to work gainfully well into their 70s and possibly into their 80s. You may be able to get a longer repayment time than the stipulated age 65 of normal retirement. So it all depends on the person. It all depends on your ability to earn past the age of 65. So you can, the right answer to the question is 5 years, but there are situations where you can get more than 5 years.
Right. And that really is a wise approach, because at the end of the day, it's about your ability to pay back a mortgage, which can be significant, and we wouldn't want to burden anybody with debt beyond a stage in their life that they'd be able to manage it. That wouldn't be in your best interest at all. So it would be a much.
Like that either.
No, see, Camille is shaking her head. No, we don't want to saddle someone in their late 50s with a 15, 20-year mortgage. It's like, no, man, that is burden. So it would be a much shorter tenure. But again, everybody's situation is different, Jerome. I'm glad you highlighted that because we want to make sure that what we're providing is a solution that suits the particular life situation of the person who is applying for that mortgage. So definitely reach out to JMMB and have that conversation. I certainly agree with that. All right, so let's moving right along. Rochelle, a question from Rochelle. I think it's kind of related back to the preference share question. I'm going to throw this back to Greg because we spoke earlier about the difference, the price movements in the preference share. So maybe just to reinforce for Rochelle, what would account for the drop in price seeing on this particular preference share for JMMB? Can we posit what's happening there, Greg?
Yeah, sure. So because the share is listed on the market, just like ordinary shares, the price of it is going to be subject to market conditions, which is influenced by supply and demand. Sometimes what you might find is that there may not be a lot of liquidity in the market, or there may be more sellers than buyers, and that may actually cause the price to fall. And the opposite is also true. If there's more buyers than sellers, then the price may likely rise. So what's happening is nothing outside of just the natural market conditions, which, it is part of the risk you take when you buy any type of share, listed shares, I should say.
Yeah. So it's really just about demand for the particular stock instrument. Yeah, that's causing that. All right, great. So no need to be alarmed. Right, Greg? I think that's a takeaway.
The market goes up, it goes down, it goes sideways.
Yeah. So it is what it is. Once you're in stocks, that's what's going to happen. But you're still going to get your dividend payments just the same for that particular preference share.
Correct. So the market price fluctuation does not impact your dividends. Your dividends are going to come same way. When it matures, you're going to get back par value same way. So you don't have to actually trade the shares unless there's a need to.
Right. So that's great to know. That's great to know. That's one of the benefits of having a preference share that's structured like that is you will continue to get those payments. Awesome. Thank you, Greg. Thanks for your question. All right. So moving right along now. Question here from, sorry guys, I'm losing my way. Nigel. Again, thanks, Nigel. Nigel dropping the great question. Camille, how does one become a member of JMMB's RS retirement scheme?
Nigel, love that question.
Of course.
So it is very simple. It is just completing what we call an enrollment form, and some other, general KYC, know your customer documentation. During this time now, what you can actually do is just send us an email at jmmbpensions@jmmb.com, and we're able to just walk you through the entire process. So it is a very simple process, completing the form, and then you'll be on track.
All right. Love it, love it, love it. Where should we go again to look for that? JMMB?
Pensions.
That's where we send the forms. Is there a place where I can access the forms online?
So what we will do, when you send us an email, we will send you all of the forms that you need to complete.
Perfect. Perfect. So send that email along and you will get the forms and then you can start the process. Simple as that. So do I need to come in and see you at your office, Camille? I know people looking excuse to come and meet you in person, but
no, you can, but you don't have to. You don't.
Yes. In this COVID time, we don't need to be mingling with people that we don't need to be mingling with, right, folks? So we make it nice and convenient for you. Love it. Love it. Caron has a question here for Peter. I'm going to redirect it. I'm going to direct it rather to Peter. He wants to know about JMMB US Wealth Builder. I'm presuming he means a US dollar wealth builder.
Right.
Could you just outline what that is exactly, please, again for us, Peter?
All right, then. All right, thanks for that question. All right, so the Wealth Builder is one of our package solutions. This is one of those, that the combination of unit trusts we put together in order to help clients achieve their goals. So even though the Wealth Builder the Wealth Builder is a combination of different unit trusts. So we in the background actually select the combination of how much of each unit trust you have in that portfolio. So a short answer is that the Wealth Builder is a combination of unit trusts that we package and manage in the background to help clients achieve their respective objectives. So Karun may have a 2-year objective. His combination of unit trusts, or the proportion of each unit trust in his portfolio, will be different from someone else who has a 10-year US dollar objective. So it's made up of US dollar assets, and we manage all of that in the background. So to Caron, he's just investing money and seeing his portfolio change while we're in the background. We're changing up the allocation, how much of each you have in it. We alter that over time. So it gives you access to US dollar investments.
All right. Love that. So because you include that in the background there. That's great. Right. Wonderful. Thank you. Thank you. Do you have any information about where we are at year to date on the performance of the Wealth Builder, Peter? Do you have that information on hand or can look it up?
So I know let me try check. I know the 12-month performance, as in on the anniversary of our live. I remember coming here at the start of the COVID, and as we said, just invest. Thou shalt not panic. Just invest. So the person who did that in a US dollar investment would have been earning around 10.something% over that period in US dollars. Because when others are panicking and you have a disciplined approach towards investing, you achieve your objective. So what I know that the 1-month performance is around a little bit under 1%. The year to date, I'm trying to pull that up as we speak, but it's I think it's anywhere around 2 or 3% year to date. But what I want to tell people is that don't look at it from the perspective of extrapolating. So don't take the 3-month performance or the 6-month performance and multiply it by 2 and say, okay, that's what I expect to earn for the 12 months. That's not how it works. What you're doing is that you're buying an asset now, And the idea is that that asset may be worth much more than what it earned over the last 6 months. So the year-to-date performance is just a guide to say, okay, this is what you did over the last 3 or 6 months. In terms of what we have planned, in terms of the target rate of return, we are targeting anywhere between 4 and 6% return on the U.S. income, U.S. wealth builder type products. But again, trying to find the best time to invest is not the best way to do it. Start now and be disciplined around doing it, and you will outperform the guy who is always trying to buy and sell, because a disciplined approach outperform all the time. And you know, if I had a penny for every time I said that, I'd be a rich man right now.
Trust me, and if I had a penny for should have done that. I mean, when I think of when I should have started to invest, even in unit trust, all those years ago when I got my first job and started to work, man, it would have been a different reality, and I just took too darn long to get started. And because it takes so little to start, you know, there really is no excuse to start and just add a little mickle every month, every week, as it were. It really will make a difference. Thanks so much for your question. All right. Let's see. Let me get back up to my questions here. Jason had a question. Jerome, how do I apply for a mortgage, a homeowner loan? I'm assuming it's a mortgage Jason is referring to. How do I apply for one with JMMB?
Well, it's pretty simple. The first thing I would suggest, if I assume you're in the market looking, the first thing is get pre-approved. So speak to any one of your financial advisors from JMMB. Provide proof of your income, proof of your age, and your identity, and we will pre-qualify you for a mortgage. Then you're able to go out and find a property within that budget. So once you've been pre-approved, then you can now employ a realtor to find a property for you that's within that budget, and then you figure out whether is it that you want an apartment, you want a townhouse, you want a single family dwelling, you want a condo, whatever it is that you want. After you've been qualified, then you can go out and start that search. And then after you've found the property that you're looking for, then you provide us with the additional documentation, such as your signed sale agreement, your deposit receipt, a recent valuation report, a recent surveyor's ID report, evidence of property taxes. And once you've provided us with all that information, and we can fully approve you for the mortgage and get you in your home sooner than later. But the first thing you do is get pre-qualified.
Yes, I would say that that's a great way. So, Jason, contact JMMB, have the conversation, and then we'll work out with you what you'll be able to qualify for. So, you know, basically that is kind of like your budget, you know, telling you what you should be looking to purchase, you know, in terms of the price band of the property that you should be looking to purchase. Thanks, Jason. Ashley's asking, what's the best way to beat inflation with JMMB products? I know a lot of people have that question. Peter, what you said to that?
All right. So my answer to that is based on is a function of your risk tolerance, right? So if you are the person who cannot sleep at night, if you see something that you bought yesterday fall in price, then what you should be investing in is something that will not outperform inflation. So the safe investment, and I use safe in quotation, the regular short-term type investments will not outperform inflation. Personally, the asset class that I look at to outperform inflation is either stocks or alternative assets, and alternative assets would be real estate, etc. Now, not everybody, like Camille, can buy expensive properties in terms of real estate investment, right? So what we did at JMMB is that we design a unit trust that has exposure predominantly to real estate. So the small guy can actually get exposure to real estate without breaking the bank. So we designed that product because over time, real estate is a good asset class to outperform inflation. Equities also over time are expected to outperform inflation. Now, again, 9 out of 10 persons are not there to say, okay, I'm going to spend my nights trying to figure out how to invest and what to invest. So, get the support of an advisor or experts. So we simplify the product or the situation at JMMB by saying, all right, tell us what you want to do. If your objective is long term and you want to outperform inflation, there's a solution for you at JMMB that incorporates real estate, stocks, bonds, a whole series of things. Now, bonds are nice and safe, in quotation, have some amount of risk, but they're much less risky and volatile than stocks and potentially real estate. However, bonds will not give you a return that beats inflation all the time. In the short run, it may not outperform inflation, especially in this low interest rate environment right now. So if you were to wake me up in the night and ask me, I would have said equities and alternative assets like real estate.
All right. Thank you. Great question, Ashley. All right. I'm going to bounce this question back to Greg from Orville regarding preference shares again. Can the interest be compounded? I'm not sure if I'm understanding the question, but again, I'm not the expert. So, Greg, do you understand the nature of the question being asked here by Orville?
Yeah. So preference shares pay dividends, right? Not technically interest, but you get dividend payments. The short answer is it's not automatic. However, you'll get your dividend payment and you can choose to purchase additional shares. That's in effect compounding, right? You're using your dividends to increase your holdings of said preference shares. So that's one way to achieve it. But it's not going to be like a savings account where you get your interest and it rolls over every month and it compounds. No, it's not going to work in that kind of way. But can reinvest your dividend payments into more units to get more dividends.
Okay. All right. Thank you, Greg, for that clarification. Great. Jazzy Dreamer, I'm going to send this question to Jerome and I'm going to explain why. Jazzy Dreamer acknowledges that JMMB, of course, has different types of accounts, banking and investments. Which mix of accounts from JMMB would we recommend to someone who's building their emergency fund to balance returns and get quick access to their money? This sounds like a Jerome question, and I'm sure he understands why I'm directing it to him. Coming in. Mm-hmm.
It is generally, your bank account would be your more liquid account, but it will definitely not give you the rate of return that our investment counterparts can. We have several facilities in the bank that can give you, fairly liquid access to your money. We have our easy access accounts, we have our bonus saver accounts, we have certificates of deposits, we have our advantage. So we have different types of accounts that gives you quick access and quick turnaround. You can walk in to the branch at any time and access your funds, but the level of return is just not going to be there as if you're expecting returns on these investments. So you can have these accounts for your emergency if that's what you're building and you need liquidity and easy access to the funds. Yes, the bank accounts, as I mentioned before, or bonus saver or easy access accounts or certificate of deposit gives you that liquidity, but definitely not going to give you the level of return that you may be looking for.
Correct. So again, it just depends on what your needs are. So when you speak about, to go back to your question there, Jazzy Dreamer, you quick access your liquid accounts like your savings, your checking accounts, CDs probably takes a little while, to kind of get it. You can't plug a debit card in and get cash in the middle of the night from a CD. But if you had, you're checking on your savings and there's an ATM machine and there's an emergency and you need cash in the middle of the night, then that one can work for you. On the investment side, you're looking at something more along the lines of a unit trust type of account, maybe closer like a gilt edge or money market unit trust that you can also have as an emergency fund, not as liquid as a checking or savings account, but still gives you relatively quick access in a hurry. So great question, Jazzy Dreamer. Greg, Tyree want to know about Wigton. You know
Weekend.
the stock questions is gonna come, right? As it relates to stocks.
Well, okay. So I get what's the question? Any advice as it relates to Wigton? So I know recently there was some talk in the market about Wigton and them front loading some revenues to pay for the turbines, and the revenues are expected to fall. So there's a bit of uncertainty out there, and certainly uncertainty does not the market doesn't really like uncertainty, and you see that manifested in the stock price. So for now, I guess persons will wait and see, which I probably agree to. But at the core of it, I mean, Wigton is a renewable energy provider, which the government has, as a part of their target energy production for the country. Renewables are going to play a very, very big role as we kind of come off fossil fuels. So what I would say with regard to Wigton is just pay attention to their ability to grow. I mean, they don't they have a kind of a set capacity in what they can generate. And one of the things you look for when you buy any stock is their ability to generate more revenue, which means more power generation, which means they probably would need to win more RFPs once the JPS puts it out. So that's something I would be paying attention to for Wigton looking forward. But I still think the company is going to remain profitable. It's just that it may not meet certain persons' expectations. So you kind of have to keep that in mind when you're looking at any stock. What is the future outlook? If it is cloudy, then maybe you wait a little bit. If you have a little bit of risk tolerance, then maybe you take time tipping the water. But nobody knows the future, right? So you have to make an educated investment decision based on what you believe or what you see in a company and their capacity to grow.
Absolutely. Thank you for that. And just to acknowledge, guys, that we had an awesome episode with Greg several weeks back. If you check our YouTube channel, you'll see his picture in the thumbnail where he spoke about stocks. How do stocks work? We also had an episode on how to pick stocks, and also stocks to watch was last week that we had with Clive. So feel free to catch those prior episodes, chocked full of some great information for people who want to understand what's been happening on this Jamaican stock market. Just a question here from Branjamin again, asking about just basically what a unit trust is. Peter, can you give us the 60-second definition of what a unit trust is, and certainly the different types of unit trusts that we offer, and how to earn from those?
All right, I'm trying to short answer. Always have a difficulty with short answers. All right, so in essence, a unit trust is a collective investment scheme. Basically, you're pooling the money of every investor into one. So the small investor all of a sudden now is able to buy big investments. So we're pooling all investors' money together, and we're making investment decisions for that pool. So a unit trust is a legal entity in which the assets, that legal entity own all the assets that we buy. Now, the returns from those assets are then divided up based on how many units you own in that vehicle. So 5 people come together, putting in $100 each into this unit trust. We now have $500 to invest. We invest that $500. The returns from that $500 is then proportionately divided, allocated to each unit holder based on the amount of units that they hold. So the value of the unit trust will go up or down based on the change in the value of the asset that you have. So how you earn from the unit trust is that you buy it at one price. So you buy it when we all pool together, it's at $1. And based on the performance of the assets, those assets may go up or down. You make a gain if the unit price goes up on the day that you're looking to sell. Now, because the assets that we buy change over time, you're at different points in time, you'll see the unit trust prices at different levels. So if you are the guy who panics and sells when you see the unit price drop, you've just locked in some losses. If you wait until the unit prices go back up and you sell at that time, you get a gain. So unit trust is really collecting the resources of small investors into one entity and investing for that group as a whole.
All right. Thank you so much. Acknowledging Richard's question, see Richard, I think him smart. Judge JMMB account is the high yield account. Richard just want to know where we must put my money if we get the big returns. So, Richard, we would have kind of addressed that. Peter, I'll save you here because, Peter spoke earlier about equities and real estate. We do have unit trust funds that are largely equity based. And really, we have unit trust funds that have real estate assets in there as well. So, typically, those would be the ones. Again, there's no guarantee. Past performance is not an indication of future returns, and it all comes down to your risk tolerance. So it's still important, Richard, as you know, to have the discussion with a financial advisor so you are in the best possible facility to give a return for you. Right? So we can't just not to put a finger to say, all right, we want that account because that'll give you the biggest one. It may not be an account for you. So great question. Thanks, guys. Okay, moving right along. ZDB is asking, is the minimum to open an investment account the same amount that must remain in the account throughout the life of the account? Or can I zero it out without closing the account? No, man, Zadie, if you want zero out the account, that's fine. We have lots of clients with zero balances. We don't want you to have zero balance because you don't earn on zero, right? You don't earn on zero. So don't leave zero and then wonder where's your interest. But please stay invested. Keep adding to your savings account. Please keep adding to your investment account. But it's not like, okay, zero, you're canceled and then we kick you through the door. No, we don't really work it like that. The last time I checked. Jerome, Karima, no, we answered most of Karima's questions already regarding our mortgage facility. Can you say what the rates are like now on our mortgage facility, interest rate?
We don't really like to quote rates like that.
Yeah,
I mean, because our competitors are listening. We see the NCV people lurking in the chat. So we don't want to quote our rates. But if you call us, I can tell you. But I'm not going to tell you like this. But in terms of how much they can borrow, we lend up to 95% of the sale price or the market value, whichever is lower. But the interest rate, you have to call me for find the interest rate. I'm not going to just tell you like that.
All right, that's an off-the-air conversation, and again, we're happy to have the conversation, guys, because as Jerome spoke earlier, the first step is to have the conversation and start the process to get pre-approved. Right, very, very important. Hey, David, and great question here from David. I'm gonna put it to Greg. How do you move your stock holdings from one broker to another?
Good question. You just request it. It's actually very easy. Once you have the account in place, you have a choice. You can actually go to the broker that you're trying to move from and write a letter requesting the transfer of your portfolio to your other brokerage relationship. Or you can actually give the letter to the new broker and they will arrange for the transfer to be done. It's called intra-member movement. That we do, all the time. It's only as simple as asking. The only condition is if you're moving from, say, an account in your name, it has to be to an account in the same name. So you can't move it from an account in your name to another brokerage account where it's joint. So it has to be in the same name once you're moving between brokers.
All right, good to know. Thanks for the question, David. Thanks, Greg. Sharifa has a question here. Peter, is there a best unit trust for someone just starting out? Is that a myth or no?
So when you say just starting out,
I'm just starting out investing. I hear unit trust is a great option for small investors like me just starting out. Is there a particular type of unit trust that you would think is best for me? Or again, it comes back down to my situation?
It comes back down to your situation. So when you're investing, I'm assuming you're not just investing for the likes. You're investing because you have some objective in life, right? So if you are a young person and you have a long-term goal, there's a unit trust for that. It may be based on equities dominantly. If you are not so young and this is your first foray into investments, then again, I'm looking and say, okay, what is it that you require? What are you trying to do? because unit trusts they're just vehicles. They're just means to an end. So if the end is long term and you're willing to take risks, there's a package for that, which will be dominated by equities. If it is that you're just investing and you've not even built up your emergency fund yet, then it's going to be a money market type unit trust. So it all depends on what your stage is and what your objective is. But what we see people gravitate towards is the equity type unit trust, because they see the rate and say, oh, you earned 12% over the last 12 months. I want that one. But then they may not be able to tolerate the volatility. So there's no one size for every person. It is based on who you are and what you're trying to do.
All right. Thank you so much, Peter. Next question here from Brilliant. Hey, Brilliant. Welcome back. Greg, can I use my equity account, equities as security for a loan? Is probably a question for both Jerome and Greg.
Well, I know on the investment side, you can use your shares to access a loan. However, it's based on your portfolio. So we don't typically lend if you say you have one stock in your portfolio. We will tend to look at your overall portfolio, which has multiple stocks, and there are some stocks that we may not necessarily lend against, maybe due to the liquidity surrounding that stock, or if there's overexposure to the stock. So the best thing to do is to speak with your representative, your advisor, and they can actually tell you how much money you can access against your portfolio. So, in short, yes, you can use your equities in your equity securities to access a loan.
Okay, thank you. I don't know if Jerome had anything he wants to add on top of that.
Against equities.
No pun intended, but Greg did a brilliant answer. But in terms of pretty much the same thing that Greg mentioned. The only thing I would add is that we will lend against your unit trust. There is a percentage that we lend of your unit trust portfolio. So yes, you can borrow against your unit trust portfolio, but as Greg said, the individual equities is a little bit more tricky, and it takes a lot more interference from risk and compliance before we can actually lend against your equity account.
Okay, thank you for that, gentlemen. All right, so David here has a question for Greg. If the price of the preference share on the market is 70 cents and is redeemable in January 2024 at $1, what happens then?
I think he answered his question. It redeems in January at $1. So, you're buying it at 70 cents and you're gonna make 30 cents on redemption. Plus, you'll also get whatever dividend that would have accrued to you over that period of time. So, if $1 is par value, if you buy it at 10 cents, it will be redeemed at that dollar on the redemption date, which is normally listed in the prospectus.
All right, good stuff. Thank you for that. All right, moving right along. We're getting through. For the education graduate, the JMMB graduate, Orville's question here. JMMB graduate education fund, can you just put a lump sum and forget it? The answer is yes, you can put a lump sum and forget it, Orville, but that's not the right way to go. Because as Peter will tell you, you need to keep adding, guys. You need to keep adding over time, because what you can earn on top of that initial lump sum, and you keep adding, what you're going to earn over time will be greater than what you would just put on that lump sum and make it sit there without adding any more to it. Did I pass the test, Uncle Peter?
You're getting it. You're getting it. JMMB live working.
I'm learning. I'm learning.
Definitely. You can add the lump sum, but I'll definitely say don't forget it. It's there, and somebody's looking at it day in and day out to ensure that it's performing well. But to your point, Kerry, we love the power of compounding, right? When you're adding to the portfolio or adding to that investment, whether big or small, over time you benefit from that additional component from the additional money that you're putting in. But the short answer is yes, you can add a lump sum, and it will also grow. But if you can add, it gets you to your goal quicker.
Absolutely. Thank you, Peter. Kenya has a great question here. Kenya, age 42 and fabulous. What's the best way to save for retirement with JMMB, Camille? I feel like you answered this already, but we know different people jump on at different points, so that's fine. You can give us the Cliff Notes answer.
All right, so the best way to save is to join our approved retirement scheme, which is JMMB Retirement Solutions. And what you want to do when you join, if you're just joining at age 42, what we'd want to do is to maximize the contribution so we can ensure that that replacement rate that we're trying to hit, 75%, that we can hit it. And then what you're also looking to do also in building out your retirement portfolio is that you're going to be looking on solutions. So if you cannot afford to buy one of the condos or a real estate property, what you may decide to do is to invest, because you want that exposure, invest in one of our unit trusts at the optimum fund, or you may not want to buy a stock outright. You may decide to invest in our income and growth fund. So what you want to do is first contribute to our approved retirement scheme, which is JMMB Retirement Solutions, and then try and build out your portfolio with other solutions that we have.
All right. Thank you for that. Great question, Kenya. Greg, Timoy has a question. Does JMMB have any plans to allow clients to buy U.S. stocks, maybe on Moneyline? If so, what's the timeline?
I think I'll defer this to Peter. Right, Peter, are you care to take this one?
All right. So wearing one of the many hats. So we are always looking at ways to provide solutions for our clients. We currently have a platform in Trinidad through our sister company in Trinidad, which allows our clients to buy stocks on the international market. We are in the process of integrating that solution in Jamaica. In terms of the timeline around that, it's a whole series of moving parts and market survey. How many Timoys we have out there who really want to utilize the service. So all of that work has to be done. But we do have clients now in Jamaica that utilize it in Trinidad. But to make it seamless and integrated into experience that everybody come to love about Moneyline, it will take us some more time and some market survey and questionnaires to fill out and project detailing. So I wouldn't want to commit on a time yet, because if only Timoy and myself want to buy stocks in US, it may not come. We may just have to utilize the services in Trinidad.
All right. Thank you very much. There is a question here from Roxanne asking about retirement planning options for a young person under the age of 30 who works on a contractual basis, now on a 2-year contract. That's sounding like JMMB RS, right, Camille?
Right on the money, Kerry. Right on the money. JMMB Retirement Solutions.
Right, absolutely. You do, and it's a great option to check out. Reach out to us, Roxanne. You can contact our client care center by phone or email, info@jmmb.com, or via phone 876-998-JMMB, and speak with our representative to see how you can get started. Awesome. Annette has a question here. How do I know when it's time to sell my stocks? Greg?
Very, very good question. And I'm going to answer it by saying it depends. Before you start, or when you start trading in stocks, you need to know exactly what your goal is. What's your objective? Is it for retirement? If it's for retirement, then you'll be holding on to those stocks for a rather long time. If you're looking at trading or short-term investing, persons have different strategies that they use to determine when they buy a stock. A common one is, okay, I want to make X return. So if I choose to say make a profit of 30% on my stock position, when the stock hits 30%, automatically I sell. It varies. It really varies. But typically, you want to sell when you've amassed a certain amount of return, and you may feel that the fortunes of a company are going to change, which means you have to always be doing your homework and knowing what's happening with the companies that you've invested in, because your portfolio is the market's not going to wait on your portfolio. So doing your homework, doing your research, and knowing what's happening will actually help you determine, listen, now is the time to sell. You don't wait until the train crashed and jump off of it, right? If you can take some gains, go into something else, that's pretty much our winning strategy. So, I mean, a question like that could take the whole night to answer. So I think I'll just leave it with that for now. So, yeah.
Yeah. And I think it's just great to remind folks, because I see a couple of questions here in the comments that would probably lend one to think that maybe folks are not altogether always clear about how to invest in stocks and what's the way to do that. And I think sometimes when people recognize that, maybe I need to find another way to invest in equities or to include stocks in my investment portfolio, and the unit trust is one way to do that. When I invest in a unit trust or something like a JMMB wealth builder, I get exposure to investments in my portfolio that are stocks, and I don't need to worry about necessarily when to sell it, when to buy, you know what I mean? So that may be something folks can consider, in addition to having the conversation with an advisor to get the kind of guidance you need. Maybe you could also consider that as an alternative as well. Because, I mean, that's just the reality of it. Not everybody always knows when to pull the trigger, and that's okay. Everybody has a different objective, but maybe sometimes too, maybe we need to think, well, is there another way I can get exposure to stock market investment stocks in my investment portfolio? Maybe unit trust or a JMMB wealth builder or graduate is a better way for me to do it, because it takes that kind of a headache away. It's just something to consider. I think I found it to be helpful. All right, guys, we're winding down because this is not an all-night party, so we're moving along quickly. Just a real quick question here from Ryan, and I think we had a great episode on this, so I'm going to invite Ryan to check out an episode we did on calculating how much you're going to need to retire. Ryan, age 41, how much does a person need to contribute to have a nice pension at retirement age? Right? Camille, I don't know if you want to kind of jump on that real quick.
Yeah. So looking on that, you're looking on your numbers. And what is your current rate of contribution? And again, going back to what we're working towards, your replacement rate. One of the nuggets coming from the previous goal getters is that while the government would have it the 75% as a replacement rate, you can go above that, and that is through investing through different options, as you would have said, unit trust or portfolio solutions. So when you say a nice pension, it has so many moving parts, because, and I just want to reinforce that when you're looking on retirement planning, specifically for those persons who are self-employed on contract, the first pillar is that you need to be contributing through the national insurance scheme. That is the first. You need to make sure that you're contributing. And then now what you want to do is be a part of an approved pension arrangement, such like if you're self-employed or on contract, JMMB retirement solutions. And then you're looking on other supplemental investments such as unit trust, whether you're going to buy bonds or equities, and just build out a very robust portfolio that can secure the type of lifestyle that you want, and you get a nice pension in retirement.
Yes, love that. Thank you very much. Camille, could you tell us a little bit about the retirement calculator that we have at JMMB?
Yes, forgive me. So the retirement calculator is an exceptional tool in guiding you along that journey. So you can access it. You can type in JMMB retirement calculator now, and you can it actually comes up, and you can actually plug in your current income, and it will give you a projection at early retirement age, which is at age 50. normal retirement age, which is between age 60 to 65, and late retirement age. If you are a JMMB client, when you go into Moneyline, there is a feature, pension query, and you can actually access the retirement calculator again to see exactly how much it is that you're projected based on your current rate, of contribution, how much it is that you're projected to have as it relates to income at early, normal, and late retirement age. And it is an excellent, excellent tool along that retirement journey that you need to use.
Awesome. Awesome. Thank you very much for that, Camille. So that's a great tool. Good stuff. Yes, Caron, we spoke to that. Can I put money monthly in my US dollar wealth builder with JMMB? Absolutely, you can put money monthly in all of the accounts at JMMB. We're not turning you away. That's the way to do it. Keep saving, keep investing, keep at it no matter what. That's the way we get to our goals. Wonderful question. Nigel is asking, do you get coaching and advice on how to trade? I'm assuming stocks when you open an account to start investing. I don't know, Greg, could you kind of speak to that a little bit? Because I mean, in terms of other investment accounts, you just kind of put it in there and JMMB investment managers do their thing on the back end. But for those who want to come in and open a stock account, I mean, is that just basically something they would have to assume on their own? Is that how it works? Could you guide us, please? Greg, I don't know if you're hearing us.
Sure. Forgive me, you were breaking up a little bit, but I think I got the question.
Sorry, you got the question? Okay. Okay.
The level of guidance you provide. So, opening an account at JMMB, yes, you will have a conversation with one of our financial advisors that will kind of give you an idea in terms of what you should be looking for and maybe a basic, rundown. But the truth of the matter is, if you're going to start trading, right, or you're starting to invest, because you said trade and invest, then there is a certain amount of self-accountability that you should have in terms of educating yourself. There are a number of resources. The JMMB Goal Get Up videos is a place to start where you can actually learn some of the basic fundamentals of investments and trading, because naturally to come into a branch to sit down to learn about trading, it's a pretty time involved process. So it's not necessarily the most practical thing. However, JMMB will support you to trade and invest. So if you're not comfortable, it's not something I would advise that you take on. You have other options or solutions such as the unit trust and other products that you can look at. But once you've made a decision to start trading, then a conversation with your rep in terms of how to go about sources that are available from JMMB, as well as the stock exchange offers courses, and there are other avenues to get the knowledge to get yourself comfortable and to a point of readiness where you can invest. But it's learning to trade is something, it takes years. I mean, I've been doing it for years and I still am learning. So it's something that you have to constantly invest your time in.
Yes, absolutely. And again, if you're not comfortable, it's not something you're comfortable doing, then I think the advice is don't do it.
That, Carrie?
Yes, we got it. Yeah, man. Thank you, Greg. You're breaking up a little, but we definitely got most of what you said. So I think the key takeaway is, while information is always available, Goal Getter live recordings, all sorts of webinars and readings on our website. Sign up for the Market Color e-newsletter that goes out every week. The information is there. The reality is that the bulk of the impetus to do it is on the investor to do. So if you're not comfortable doing it and you're not quite sure, then don't go into that. Go into a unit trust that is based in equities. That's a better option. But having made the decision, make sure you educate yourself, because it really is, I guess, impossible for an organization to know when it's right for each investor to buy and sell a particular stock. There are so many different permutations and combinations of ways to trade trade in stocks. And so it's really incumbent on the investor to know to do it. And if you're not comfortable, that's quite okay. There are options like the unit trust and the JMMB wealth builder and so on that will just basically give you that exposure to stocks without you having to figure out when to buy and when to sell. Very useful stuff. All right, guys, these are the last few questions now. We're taking it home. Closing off right now. Radhika was asking someone who is not risk tolerant regarding the type of investment to get into. Any quick recommendation there, Peter? The Cliff Notes response on that.
So I interpret that as you don't like risk.
Right.
All right. So you don't like risk, and you are a short-term investor. The options for you will be basically close to money market and bond type return funds. So you can either buy a high quality bond, or you can invest in one of our bond funds, or you can, again, tell me what you want to do. Tell us how much money you have, the time horizon you have. We have a tool that tries and assess your risk tolerance. Because a big part of risk tolerance is also people not understanding how things work. So if we walk you through it and it comes, the conclusion is that you're risk averse, then the solution for you would be predominantly in fixed income type assets. So you're not going to see a lot of equities in your account. But the return on your portfolio may be lower than the guy next door that has a lot of equities. So don't look over the fence and say his return's high, and because your risk tolerance is different from his. So it would be predominantly money market and bond type assets that should be in your portfolio.
Yes, thanks for that, Peter. And I'm glad you raised a point about different people earning different rates of return, again, depending on how much risk they take on, even though the name of the fund is the same, the name of the portfolio is the same. My wealth builder and your wealth builder, the return may not be the same because of my level of risk that I'm taking on. I think there was Orville had asked a question earlier in the chat about what's the yield or the return on these things. And the thing is, unit trust and the wealth builder, we can't predict the returns. We can't tell you, well, you're gonna earn 10% or 5% in the future. It's really just about how the assets perform in the moment. So we can tell you what happened in the past, but past performance is not an indication of future returns. You just look at the past performance of the fund, and then again, you make a decision with your financial advisor about where you're heading, but there's no guarantee about what you're gonna get and when you're gonna get it, which is essentially what investing ultimately chalks up to. Unlike something like a CD, as Jerome spoke to earlier, where is a 30-day CD, I getting X% and a 60-day and 90-day whatever. Investments, it's not that. It's putting in your money, being disciplined about adding it, and then you're gonna get what you're gonna get with experts along managing your portfolio along the way. Love that. The question here from O'Shane, we're wrapping up. Can I open a JMMB bank account online? Yes, we can. Yes, you can. Let's go on our website, check it out, or you can contact our client care center via email, info@jmmb.com. And there is the URL on our website where we give you all the details about how you can submit your forms all online via email. You don't have to come into a branch in the COVID or no time at all. It can be done. Wonderful. O'Shane asked, does JMMB post what makes up all the different unit trusts so I can know which one to go into? O'Shane, great question. And the answer is yes, during the offering circular, right, Peter?
Yes, in the offering circular, which is a document, a big document that goes through everything about the fund. Also in the paper, there's on Wednesdays and Fridays, all the unit trusts, and it identifies a F for fixed income, a E for equities, a R for real estate. However, those are like guidelines. If you really want to see what the unit trust has or should have, you have to check the offering circular, and every unit trust provider provides that, or it's on our website.
All right, thank you for that, Peter. And the final question before we do the wrap, Michelle wanted to know about annuities. Do we have annuities at JMMB?
So What so the question is, what is an annuity? And essentially it is an insurance contract that allows you to get a stream of income when you have stopped working. So essentially you're getting your salary when you when you stop working, a stream of income until you pass on. There are different types. So one of the things that I need to reinforce is that at JMMB, what we do, we go through JMMB insurance brokers and we go and we get the best annuity options from the different insurance company, and that happens at the retirement. So you have several options. You have 5-year guarantee, 10-year, 15 joint life and survival, US index. You have several different type of annuity options, and because that is a whole different ballgame and conversation that we need to have with you when you're at retirement as to what is the best option. But the good thing with JMMB is that through our insurance brokerage unit, what we do, we go and we find the best ones and we come to you and we have a further conversation, because that is another element of financial planning as to what is it, the amount of money that you're going to be getting and how it is that you're going to manage that money specifically during retirement.
Love that. Thank you so much, Camille. Guys, man, I tell you, this has been, woo! We just run a marathon. This has been an awesome episode. I mean, I know we've gotten some particular questions about people's personal situation. Somebody forget them PIN and want to reset their PIN, want to know how to do that. Somebody was asking about the best way maybe to invest in US dollars, J dollars, and their age and stage. All those particular very personal questions, guys, we are happy to support you with that. We invite you to reach out to our client care center. You can reach out to them via email, info@jmmb.com, or you can call our client care center at 876-998 JMMB, or that's 876-998-5662 to have your particular question answered. Because at the end of the day, what we realize too, apart from the pin issue, because we're not resetting any pins here on this live, we don't want that getting out on the interweb. But what we realize is that obviously this thing about setting up your finances, whether it is an investment for you, whether it is your mortgage that you want a loan, you want to even start a savings account, a checking account, everybody's life situation is different. And so it really starts with having the conversation. First of all, guys, please can we get a round of applause in the comments for my awesome panel of JMMB colleagues who, man, them run the marathon tonight, them earn them salary and them profit share and then Christmas bonus and everything. It's wonderful, guys. Thank you so much. You see how them come pretty in them red shirt, and Camille in her hot red dress. Camille, you have a new fan club tonight. Guys, we are so appreciative of your time. Of course, guys, this is the last episode of this season 3 of JMMB Goal Getter Live. We are taking a break for the summertime. So for the months of July and August, we are going to be on break, trying to beat the heat with the rest of y'all. But don't worry, guys, we're coming back again in September. You want to know when? You're going to have to follow us on social media, JMMB Group Jamaica. We are on Facebook, Twitter, LinkedIn, and Instagram. And guys, remember, all of these episodes we've done in seasons 1, 2, and 3, they are online. They're on our YouTube channel, JMMB Group Jamaica. We've also had them on our Facebook page, so check them out, guys. You can watch them, re-watch them, pause, press play, call your friend, take out the popcorn, watch night, movie night, everything, because all the information is there. Rich conversations that you can go back and watch. And then, guys, please share with us what topics you want us to cover in season 4. Again, we do this for you guys. We do it for you. So we want to provide the information that you need to be able to navigate your financial life goals. So send us a DM or drop in the comments. Tell us what topics you want us to cover in season 4. We'd be happy to take that under advisement and pull all of that together for you when we get started back in September. And guys, we appreciate you. Remember to share this live, like this video, click like, subscribe, press the notification bell so you know when we're going live again. Keep in touch with us on social media to know when we're coming back. And again, guys, thank you to our awesome guests. Thank you to my marketing team. Thank you, Steph, especially to Steph and Jessica, our admin, who works very hard in the back. And of course, as always, to our awesome viewers. And a reminder, guys, COVID don't done. So please, yes, the curfew them freeing up and we're happy and we're celebrating, but COVID is still here. So please, guys, remember, wear your mask, wash your hands, keep your distance, because we need to be protecting not only ourselves, but each other, the more vulnerable from what is really still a very awful, awful illness. So thank you, guys. Wishing you all the best. Everybody stay safe. Good night. See you in September. God's willing. Take care.